Welcome to another edition of Zach's Rank Buy. I am Brian Bull, and I'm the aggressive growth stock strategist here at Zach's Investment Research. And I got two more stocks for your aggressive growth radar screen. And today we're talking oil. So let's get right to it. The first name is Prairie Operating Company. You can see it right there. The ticker is PROP. It's prop. It's a Zach's Rank number one. It's a strong buy. D for growth for some reason. The Zach style score isn't instantaneous. It takes a little bit to catch up, but normally I have an A or very strong growth rating and then a weak value score. But there's a special situation going on with this company here. I can see right here, it's $145 million market cap. And as we take a look at just the price right here, why don't we do that real quick? We can see a point in time here where the stock shot higher. So that was when the company announced guidance and then later on moved up on an acquisition. So they're acquiring Bayswater, another Colorado-based drilling oil concern, or at least part of it. And so they go from $150 million in market cap, and the acquisition is of $600 million in assets. So if we think about this, there's now $750 million, basically, if you add in the acquisition on a one-to-one basis. And, I think we have a new share amount of around 35 million, maybe 36 million shares. That would put the price at $21 a share. So that's a huge, huge increase, right? $21 when the stock is only trading $5.74. It's a big deal. All right, let's go through the numbers and we'll take a look at everything that we normally look at here. All right, are you beating the number? Prairie really wasn't bringing any oil up to the ground last year. This year they are. So as that changes, you're going to see significant change here in the earnings reports. And we can see that here. So the first quarter, current quarter, I guess they don't have the last quarter of last year in yet. So it was looking at a loss of 12 cents. But the first quarter, the quarter that we're pretty much in here for 2025, that number went from 32 cents to $1.18. Now that is a tremendous increase in earnings per share. For the full year, we go from 244 to 478, and we don't have numbers out yet for next year, but I am going to guess they're going to get bigger. I think those numbers get bigger because of this recent deal. Well, let's just take a look here real quick. We see we're expecting $695 million in revenue on top. That's an absurd growth rate of 8,600%. We don't know what next year is going to be like, but it's going to be bigger. I can tell you that because of the acquisition. They made that acquisition. All right, our financial metrics here, we're a little late and a little skewed on this because of the deal, which, we don't have full numbers and, we're waiting for the next quarterly report on that. But 1.12 times forward earnings when you see a gigantic growth in the top line, trading at 2.3 times book, but that number is actually going to be below 1 when this deal is closed because you're adding in all these assets. Stock hasn't really appreciated, and that's why I keep harping on this particular stock. All right, let's take a look at the chart, and we can see things. It wasn't really this company; it was a shell. So, this time horizon doesn't really matter so much. It's right in here, and if we could go in here, we've got the three misses, and now the earnings have started to really run up because, and that's all skewed, but it is what it is. The idea is that there is 1.7 million shares short in a 23 million share outstanding. That was the old number, so it's going to be 35 million. There's still a significant short position here. The big overhang of the offering has been changed. It was going to be a $200 million stock offering. It went down to a $40 million stock offering. It means there's going to be long-term buyers in place for this stock. So I see this stock moving a lot higher. I know that Singular Research has a $20 price target on it. And we should expect more research coverage on it soon, courtesy of the deal, Citi, Truist, KeyBank, a whole host of others. All right, so it's PROP. P-R-O-P is the ticker. Let's go ahead to our next stock, and that's Kolibri. Forgive me if I say these wrong. I always got F's. I got PHs in phonics. I got F in phonics. Global Energy, it's KGEI. That's the thing you want to get right, is the ticker. It's Zacks rank number 2. B for value, A for growth, alternative energy. But I think they're more kind of oil exploration, if I remember right. We can see this is also a very small cap here at about $280 million in market cap. Stock has been performing well this year, came up, came down, a recent beat, and looks like we can be headed higher if all things work out. Let's take a look at the numbers that we normally check out. All right, so we've got a miss, a meet, and then 2 consecutive beats, but we're earning money, earning same, and now moving up. So on an absolute basis, I like it. What about our estimates? Because that's what's important, the estimates, what's going to happen next. 12 cents to 16 cents, that's an up arrow. 15 cents up to 19 cents for next quarter. For the full year, 59 cents up to 75 cents. And for next year, they haven't changed the numbers yet. We're just hanging out at 85 cents, but that still implies some good growth. What kind of growth would you say? Well, I'd call it 13% earnings growth, but I'm all about the top line. And how's the top line? The top line is going to be 82 million, way below what we're talking about for prop. Prop's going to be 600 million. This is going to be 82 million. 42% growth is great to see, but 21%, you're going to slow down a little bit, but it's understandable. And again, 100 million, well below what a prop is doing, as we can see there. And the market cap, obviously 280 million versus 150 million, kind of underscores what's going on with Prairie Operating Company. All right, for KGEI, we've got a 10.5 times forward earnings multiple, 1.5 times book, 4.7 price to sales. Saw a top line grow 29% last quarter, and margins are right in that 29 to 30% range. Now, the key with all of these oil companies and energy companies, just in general, let's take a look at our chart. We can see that this came out late last year, came into the $3 range, and then jolted higher around the election. And boy, that was quite a move from 3 to 8.5 down and around. But the key is for KGEI and any oil stock is the price of oil. And so here I've got a chart courtesy of my friends at FinViz, whom I love. I think they like me, but we've got the crude oil. And in this chart, we can see just in the last week or so, oil prices pretty much bottom out around $66, now heading back up towards 70. Drill bill, baby drill doesn't really work in the 60s, because the oil companies aren't going to be drilling a lot at the 60s. Drill baby drill comes in when we got $80 oil, $90 oil. If we blow this chart out a little bit, you get a better view of what's been going on just recently. And then how about this? We'll go out to the day limit. We can see where oil has been. It was back around 95 last year. Maybe was that 2 years ago? That was 24. That was 2 years ago, almost October of 2 years ago. So almost 2 years ago, a year and a half ago. But a big skid because Trump coming in takes oil from 80 down to 65. That's not going to cause the drillers to really go out there and put more product out. They're gonna slow production then and try to bring that demand back to equilibrium. The oil companies want it between 60 or 65, give or take, maybe 70 and 90. That's kind of the sweet spot that keeps demand alive. So with oil prices moving back higher, the oil stocks are going to look that much more attractive. All right, that's it for this week. Be sure to join me next week when I've got 2 more stocks for your aggressive growth radar screen. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.